It's a great pleasure to welcome you all to a webinar today to discuss insights on EV sector financing landscape in India with our leading industry experts here today. Before I give a quick round of introduction to our panelists, maybe a little bit on the format of the webinar. The webinar will consist of an interactive discussion with our speakers, followed by question and answer session from live audience. Participants are welcome to submit their questions in the Q&A box at the bottom of the webinar window. And may I also request my panelists to keep a check and answer some of the relevant questions in that Q&A box to keep our audience engaged. So given the growth of EV sector in India, the role of financing is very important, as all of us know. And some of the key discussion points that we want to touch upon during this webinar today is to understand how the EV financing ecosystem has evolved in India. What are the innovative financing models that work for EVs? What kind of technological advancements are required to cater to the retail financing? What are the main issues and challenges with respect to EV financing that OEMs and retailers have faced, and possible solutions to address those challenges? And now to take on these points, we have with us Dr. Dev Mukerji, an industry veteran working as Chief Advisor at Omega CK Mobility, India's last mile connectivity solution provider. He's an ITA alumni, and Dr. Dev has also received his PhD from Jamia Millia Islamia. And Dr. Dev has also worked previously with global auto giants such as Suzuki and Honda, and has been an instrumental in setting up greenfield plants across India, Mexico, and Thailand. Welcome, Dr. Dev. Next, we have on board Mr. Mayank Premi, founder of PerUse, a fintech company, and Beacon Analytics, a supply chain analytics company. He's an MBA from IIT Delhi, and he has a rich industry experience in the commercial vehicle segment. Welcome, Mr. Mayank.
Thanks, good to be here.
Next, we have on the panelist today is Mr. Joseph Teja, who's a consultant at CALSTART. He has a rich experience of more than 15 years working with various government organizations in Niti Aayog and earlier with Ministry of Housing and Urban Affairs. Welcome, Joseph, to our discussion today.
Thank you, Jyoti, and the JMK team. Pleasure to be here.
Lastly, we have our panelist, Mr. Danish Dogra, who's part of EV2 Ventures and handles investments in the smart mobility sector. Welcome, Danish.
Thank you for having me.
So, I will start my discussion with Dr. Dev, you first. From an OEM perspective, we want to understand how things have worked, how things have evolved in the EV space for you, and Omega CK is also into EV financing, the parallel division that is. So what are the things that worked and that did not work for you? What trends you are seeing right now in this sector?
Yeah, thank you, Jyoti. Thanks for having me in the panel. It's always a pleasure interacting with you and JMK team. So things have evolved. As we all know, the industry is pretty sizable, growing at a very significant rate, particularly the two form factors of two-wheelers and three-wheelers. So this is where I think the success story of India's electrification lies. And next, I see that, the pickup truck commercial vehicle segment is kind of waiting to be disruptive. Personally, I believe that this is going to be a bigger disruption, even bigger than three-wheelers and possibly two-wheelers. So this is where I think the whole opportunity, the opportunity package lies for the financing companies, whether NBFCs or banks or other fintech companies. And unfortunately, the things did not really start when, but I'm talking my own experiences. When we started in 2020, we launched the vehicle. And we were one of the earliest in the space in three-wheelers. I mean, the India made three-wheelers. Indian electrification, as we all know, started with Chinese imports, two-wheelers as well as three-wheelers. So that was a problem because the asset side risks were high quality was a problem, durability was a problem. There were also a lot of unknowns about the safety of the vehicle, battery quality, battery life, etc. And understandably so, the financing community obviously did not have confidence in this space. It was a new space, evolving. And at the same time, when you have so many unknowns, quality is unknown, durability is unknown, safety is not really great. So obviously the asset side risk becomes very high. So that's where, we had a lot of challenges getting the vehicles financed and convincing them that, our vehicle is a good quality vehicle, made in India vehicle. We do not import anything from China, etc., etc. And that there is always a journey, when you start from there and then you go to a level where the lending community, financing community realizes that, yes, it is a bet worth taking, and I'm going to, put my money in. So this is where we are now. We have a very significant traction with the entire community, with banks, with NBFCs, also government entities, SIDBI and IFC, etc. So all those are coming. I won't say they've kind of opened the doors like the IC vehicles, but understandably so. So what I'm trying to say is that, that asset side risk was the biggest factor, which was a big deterrent to this community. And secondly, linked to it, obviously, the business side risk. Once the asset quality is doubtful, the vehicle doesn't run, let's say, 8 hours or 10 hours a day. Obviously, you're not going to generate, because three-wheelers are commercial vehicles. Nobody uses three-wheeler for a personal usage. Same way, the two-wheelers which are deployed on the last mile, food delivery, e-commerce, etc., they also have to run, 16 hours or 18 hours a day. Otherwise, the viability doesn't work out. Then the business continuity is questionable. So I think I would, if you have to ask me to summarize this, I would say the owners of this whole the financing lies with the OEM. OEMs will have to, develop a right quality product, durable product, which, I'm not talking about the resale value at all, because I really don't believe in that, the resale and all, while you are actually funding him, because you don't really, take into account whether the guy is going to be defaulting by default. You take it that he is going to pay and your money is going to be recovered. So the onus lies on the OEMs, which is where many of the OEMs have failed. The industry has actually failed, if you ask me, even today, because we do not have a robust supply chain in place today. Let's say, I'll quickly summarize. We made and we are going to make probably 1.5 million vehicles, two-wheelers, three-wheelers put together today. I mean, this financial year. So where are the companies who made 1.5 million motors? Where are the companies who made 1.5 million batteries? So obviously the answer is known. Most of it came from China. So this is where the problem lies. The supply chain has to be robust. The way OEMs have to work on R&D, engineering, and bring out the product, put it on the table where there is no question or doubt in the mind of the financing community, whether banks or NBFCs, etc. So I think this is where the challenges lies. Yes, success has happened last couple of years. Definitely there is attraction, but going forward, I think supply chain needs to be made robust. Yeah.
Thank you, Dr. Dev. Two follow-up questions on your initial comment. So what kind of assurances right now the OEMs are giving to put finances at ease? Specifics, if you can talk about. And then second, how Omega Seki's EV financing arm has evolved. Do you think, are there defaults that you are seeing, or it's in right path compared to IC vehicles? Also, the interest rates are still significantly, there is a differential. Do you foresee that those rates to come down going forward?
Yes, I'll take the second question first. The Omega Seki, we started our own in-house NBFC primarily to give confidence to the market that yes, this is my vehicle. I'm putting my money, where my mouth is. So this is and to kind of showcase our quality, our credibility in the market. We started the NBFC and we finance the vehicles. Obviously, the cost of capital, accessibility of capital is high for us. We are not a per se a fintech company or a financing company. So, but it was started to give confidence to the community at large, all the stakeholders. So yes, the interest rates have started softening. Earlier, when we started, they were north of 20-25% even, that was the kind of interest rates we were talking about. Put it into in terms of EMIs, it would be something like 14,000, 15,000 a month, which is very, very significantly high, considering that the income itself is about 25 to 30,000 a month. So all put together, the revenue per vehicle. So I think it was very high, but now we see that they are not at par with the IC vehicles. Still, there is a differential or delta of about 4-5%, but they are softening. And I think as the confidence comes, the volume come, then the rates will or the terms will soften. So this is where we stand. We are not looking to expand our NBFC business because that was started for a specific purpose. And this is where our order book is, the loan book is today, I think about 50 odd crores. So that's what it is. Yeah.
Thanks, Dr. Dev.
Yeah.
Mr. Mayank, maybe you can also share some bit of insights on what is the need for OEMs and borrowers, how need has evolved over last 2 years, and maybe you can add on to what challenges and solutions you foresee in this financing bottleneck, I would say.
Yeah, I mean, there's not much to add. Dr. Mukherjee has obviously laid the land quite well. And he has brought in a journey that I think the entire sector has seen over the last 2-3 years on how things have evolved. Though I would, as an independent, right, we are not aligned to OEMs and we are not aligned to lenders. So we have a outsider perspective on this, right? And I think the goal that we all collaboratively need to have is advancement of electrification of mobility in the country. And we all know that it has been proven without doubt that this will happen in the smallest form factor, it will happen in the last mile, it will happen in the intracity. So that's established very well. Unfortunately, even if all challenges of electrification were removed, electrification of mobility were removed from the quality of vehicles, the sourcing of vehicles, charging infrastructure, loadabilities, etc., etc. We are still dealing with a segment that is considered risky as far as lenders are concerned, even if these were IC vehicles, right? On top of which, we are adding the complications of electrification and of the journey of evolution of these form factors, right? So there is definitely a lender who will be cautious of putting money behind this. And I'm talking about the larger lenders who can really make a difference on the overall borrowing rates for these vehicles, right? You're not talking about smaller, newer age financiers because they may have other ways of mitigating their risks. But the traditional auto finance people, they need to get on the bandwagon and start lending it. There has been a lot of change as I see it over the last 2 years. What was happening, let's say 1 year back or 1.5 years back to now, I think a large part of the lending that happened earlier was largely institutional led, right? So it was largely to larger fleet operators. It was larger. So even if the rates were higher, it was available, right? The problem now, I think a lot of OEMs face is that trend is declining, either because there is more supply or probably less demand from the larger fleet aggregators, new age logistics people. As a result, there's a lot of stress over sales into the retail market. And when the moment you switch as a lender from a corporate P&L to a bank statement, or even maybe in some cases no bank statement at all, the risk is disproportionate for them, right? I think that trend has started, and that is why a lot of pressure is being felt in the market about rates, about non-availability of finance, and things like that. So that is one big change that has happened. Also reflecting on what Dr. Mukerji said, there has been one reason or the other that the larger financiers have held back. I remember at a point of time when we had issues with the country, that was something that was said very, very upfront in meetings that we had with lenders, that, hey, a lot of sourcing is happening from that country, and hence, we've got a mandate not to do this. So one reason or the other will keep on coming up, but the real issue here is that there is a risky segment and there is a risky product, unproven product. Even if it's proven in our eyes, it is not proven in their eyes till they see the entire cycle. Now, one needs to understand that cycle for the entire data to come in, as in, hey, how much did this model run by this OEM? Did it complete its lifespan? Did it give it ROI? Is there a salvage value? That might take us another 5-6 years at the least. Now, we can't sit on our hands meanwhile and work with, as Dr. Mukerji said, rates of north of 18%. That just kills the market anyway. So there has to be newer ways of mitigating their lenders' risk. And regardless of how we think about it, the traditional mechanisms just won't work for this particular use case, right? So you cannot lower down risk by evaluating the customer better. Hey, the customer is going to be the same. They are going to be risky. Some of them will be unbankable. Most of them will be unbankable. They will have poor credit scores and all of that. The fact that you don't know the salvage value or the resale value of a vehicle will remain what it is. It won't change very quickly. But fortunately, electric vehicles offer us many more ways of reducing the risk for the lender. And the lenders need to start looking at those mechanisms and bring overall perceived risk down. So even if we won't get to the 11-12% interest rates, can we do with 15? But more importantly, even more than interest rate, in my opinion, for commercial vehicles is the LTV. Can they get that LTV in the 90+ percent mark? If they can do that, the sales will happen.
Right, Mayank, thanks. So do you think digitization and technology can play a role to improvise on some of our lending mechanisms right now, specifically in EV segment, since innovation is needed?
I mean, so there has been a lot of work in the automotive sector that has happened, automotive retail sector that has happened on the digital journey side for customers, right? But they are relevant mostly for personal mobility segment, right? That's how the journeys are taken. They're discovering vehicles easier. They are tying up vehicles with customers. That is becoming easier. The dispersal of loan is becoming easier, probably at the click of a button. But all these are great, right? But they don't have as much of an impact on the EV side as of now from the customer journey digitization. However, as far as other technology interventions are concerned, in fintech, they are very, very relevant to bring down the perceived risk for lenders. I would not fret too much about digitizing customer journeys for EVs currently.
Right, Mayank. Thank you so much for your insights. Uh, Joseph, maybe you can talk about, you have worked for long with Niti Aayog. So how government can help, for the EV financing sector in India? What has government already done, and what possibly more government should do?
Yeah, thanks, Jyoti. So, a couple of things. Uh, as previous speakers mentioned, our Indian market is very price sensitive market, and the current EV technologies are sitting at like 1.5 to 2x when it comes to the upfront cost, making it more unaffordable. And Mayank, he put it directly. The major issue is the LTV and the you know and also the longer term of financing, the interest rates and all these things. So making it more challenging when it comes to the these are the major challenges when it comes to the EV financing. And as a policy expert, I worked in the Niti Aayog for 5 years and trying to put these pieces together along with my colleagues, and looked in depth of these issues and worked with many of these stakeholders. And some of the interventions, I'll start with the today's interim budget interventions. There were some interesting interventions. I'm curious about how this is going to exactly what we are discussing today. So today the finance minister has announced, there would be a 1 lakh crore kind of a capital is available for, will be made available for new technologies. And the government highlighted that it will be available for sunrise domains. And in budget 2022 and 23, the government defined clean mobility and the clean energy as the sunrise sectors. So I am very curious, and the kind of terms the finance minister, honorable finance minister, has used is, a 50-year interest-free loan and a long-term financing for, or a refinancing with long tenures and low or nil interest rates. I think this is the exactly such kind of interventions required to this nascent industry in order to mitigate these risks. So in that front, this is a great move that the government has done it today. And I'm curious the contours of this, more nuances of this, what they have proposed, how it's going to be divided between the various sectors. And to give a couple of other initiatives that government has been trying to put together, to bring down the interest rates, is to the government is working with the multilateral development banks, both World Bank and ADB, and to mobilize almost to the tune of $1.5 billion concessional financing to the sector, starting with two-wheelers, three-wheelers, four-wheelers, and the buses. And medium commercial vehicles also, as the segment gets, technologies gets matured. So the issue is working with these multilaterals has been like there's a lot of processes involved, but by the time even the World Bank president says when $1 goes out of the gate from the World Bank, and on average it takes a 10-year long time. So I mean we have to work out how to reduce this time so that the concessional capital, which is available to the NBFCs and other players in the market, and bring down the interest rates to the consumers. Yeah, I'll pause it there, and happy to answer other questions. Yeah.
Thank you, Joseph. Dr. Dev, can you suggest anything to bring these concessional lines quicker for Indian clean mobility sector?
No, it is great. We do see a consistent government intent towards clean mobility. Policies, of course, keep going up and down. We see what's happening, and a lot of clarity is still required on the next version of FAME. We'll wait and see how it pans out. But I would like to put some of my thoughts on where do we go from here. I think one more important point is the role of technology into this whole sector, where I believe that, you see, first of all, IC and EV are fundamentally different. When I say fundamentally different, I'm not getting into the debate of 30% or 80% or 100%. That is irrelevant, because I believe that, the fuel mix strategy of every OEM will be different. Now, the way EV is different from IC is that, for the first time, OEM is responsible for the fuel. It is, which is the battery in this case. So this whole battery economy will evolve in parallel and also in sync with the OEM. I mean, the automotive industry. When I say battery economy, right from generation to charging to swapping to second life and end of the life, the treatment, the recycling, etc. So, how does the financing industry fits into this? Whether can you have a separate battery financing separately, or de-link it from the automotive? I don't know, but some innovative products will have to be developed, designed between the OEM, between the car maker and the financing industry. Because you see, this is the auto industry is actually becoming part of the energy industry. When we talk about EVs and other non-conventional, tomorrow maybe hydrogen will be coming, etc. So see, this is not an independent car industry where you just make your cars and sell and forget about it. This is going to be where you have to provide charging. You have to provide various methods of charging: slow charging, fast charging, rapid charging, etc. So you're becoming part of that whole energy ecosystem. The stakeholders are energy generation companies, transmission companies, the grid, etc., etc. So there is a whole different ecosystem which is developing. So I think the financing industry has to work together with OEMs and not just trudge on the conventional path of the money lending path. We'll have to work on some innovative products wherein you can be part of this entire ecosystem, wherein there will be several other avenues of revenue generation. For example, carbon credits are coming, the whole vehicle to grid is coming, etc., etc. So the battery itself is a very, very huge. It is actually, according to me, it is going to be bigger than the EV industry, because you need replaceable batteries. Then you have ESS coming in, etc. So I think the opportunities on new innovative product development are immense. This is where both the vehicle makers as well as the financing companies will have to work together and come up with some innovative solutions.
Thanks, Dr. Dev. Let's shift the discussion a bit from the debt side to the equity side. So for that, Danish, I want to understand from you, there are a lot of startups that have come up in the EV ecosystem in the past. So how startup financing has evolved in last few years, and what are the key factors that are considered by investors for funding an EV company?
Interesting. So thank you, Jyoti, for the question. So yeah, shifting the discussion from debt to equity. So the EV funding, equity funding landscape has evolved. In 2021, almost $300 million was put into startups for in the EV sector. And when compared to that in 2022, it was double to $758 million, according to the data available. And I think in 2023, we closed, in the north of $1 billion in EV, equity investments. So these data points showcase how the startup landscape, especially for electric mobility, is faring in India. With the government push for electric mobility, some for example, let's take Delhi policy. Also, Delhi government also said that everyone needs to shift their last mile fleet from ICE to electric vehicles. So these kinds of push are also helping startups to actually move into this sector, and the financing landscape for electric mobility startups in India is also improving. So a lot of startups, I've been investing in this space for almost 2 years now. Evaluated more than 1,200 startups that have come into the space. A few points that we look into while investing is, for equity investors, especially for early stage investors like us, a lot of factors are considered. A few of them are one, commercialization and mass adoption of technology backed by intellectual property. The world is evolving, and the human capacity to develop interesting technology is also increasing day by day. But would that tech scale and be commercially viable is one of the important things that we look at while evaluating, especially players in battery technology, motor controller sector, and electric mobility. Investing in product development, in my opinion, in India has to be for the mass market. You cannot develop a niche product and expect it to be venture scale. This is one of the factors that we look into. What second factor that we look into is unit economics positivity. A company has to be unit economics positive. I think it's a fundamental theory of finance. You buy at a lower, you add some value and sell it at a higher. The major issue for unit economics negative business is that people are actually not paying you for that value you're adding. So if people are not actually paying you for that value add, I think there's something fundamentally wrong with the business. Then the third point that we look into is clear path to profitability. Any company while starting is prone to burn cash, some amount of cash, but the path to profitability has to be very clear, and a proper roadmap for that scalable, sustainable business has to be showcased for the investors. So these are few fundamental things that we take in while evaluating startups in the mobility sector. So yeah, open to any following questions.
Yeah, Danish. So have you also analyzed in terms of majority of this financing, is this shifting to uh, EV component makers or service providers, or
Yes.
it's still the focus is OEMs only?
No.
How this is evolving?
Exactly. So I would like to include Mr. Mukherjee's point here. They said that their company is actually is going to make millions of vehicles, but he rightly pointed out where are the component makers in India? Where is the supply chain? So we are actively looking into startups in the component space, but the ratio of OEMs coming up versus components specifically in the battery technology and motor controller space, the ratio is extremely it's biased towards OEMs. A lot of people think that creating OEM is very easy, but no one is concentrating on the component space. Very few component manufacturers in India as of now, and the companies are in terms of technology are way behind when compared to companies based out of India. So there are a lot of US players that I've analyzed are building phenomenal tech in the battery space, but when compared to India, I think India is still behind. And I think Honorable Finance Minister also mentioned in the budget about a 1 lakh crore budget for technology improvement, research and development. I think that should be put to use in these sectors, especially in the battery technology and motor controller sector. The supply chain has to be robust, developed in India for actually scaling up this sector.
Thanks, Danish. What I also want to understand from you, is there any kind of, or what kind of assurances you take from OEM specifically before funding any
So we're early stage investors in Euler Motors. So when we invested in Euler, so Euler had already at that time had already filed for a patent, had IP around the battery technology, and had vehicles on ground. And our basic analysis is we have a chat with all the customers that are using the vehicles, and it is an initial bet that we took, and not a lot of OEMs were there at that time in the market. And that analysis actually led us to invest in Euler Motors, backed by Saurabh, who's a great founder. But now a lot of OEMs are coming up in the market, and to be honest, the space is getting crowded. Finding out patents, finding out USPs among these OEMs is getting difficult day by day. So that's why my focus while looking at startup is more on the component side right now, because if vehicles need to be on ground, you actually need to have components for those. When we take ICE, for example, the automotive sector is developed. The supply chain is developed in a very good fashion. There are a lot of OEMs making different parts for the vehicles, but on the electric vehicle segment, it's still at a very nascent stage.
Right, Danish. Thank you. Thank you for the insights. Maybe I will take a couple of questions from the Q&A box. There are some questions regarding decoupling of battery, Dr. Dev, that you were also mentioning. So there is one specific question, if you can answer. Are banks okay with decoupling and financing battery? Also, if battery is invoiced separately, it attracts a 18% GST. Do you expect the government may consider reducing this to 5%, which is applicable to the entire vehicle? Joseph, maybe you can also give, if you are aware, any such trajectories planned by the government.
Yeah, duty differential is an issue that industry has been taking up with government. So I think over a period of time, things will straighten out, because as I said earlier, there are a lot of unknowns when an industry like this starts, and it is a very, very significant change, in the automotive industry. There's a whole lot of supply chain which will become defunct, and a new supply chain will emerge if the numbers those are being talked about. Even 30% is going to happen. And now Maruti has come up with their own plans for the next decade. So those are huge numbers. So obviously, the whole battery tax issues and all will get sorted out. I believe so. Secondly, the battery decoupling, it is all a matter of, as I said, coming up with innovative, financing products, options, and end of the day, you have to de-risk, and it applies to both. See, nobody wants to, not many would like to take a loan and become, and default on it intentionally in this segment. So only big people default. So the guy who earns 1,000 rupees a day will, first thing he will do is pay the 100 rupees EMI for the day. So what I'm saying is that it is de-risking his business, his asset, as well as on the other side the lender's risk needs to be covered up. So I think only decoupling the battery is if you ask me personally, it's not a great idea, because there is a lot of value that the energy pack brings it to it, and then also tracking the battery, if the battery goes bad or something like that, those issues need to be taken care of. So I think practically speaking, it may not work. It has to work like a bundled package, and this is where I think the other revenue sources, like I talked about, whether it is carbon credits or even software as a service. The vehicle is are going to be packed with a lot of software. Those are the new avenues which will emerge, and which are coming up. If you of course, Tesla is the top of the line, but see their revenues of almost 20% coming up from software services, so charging services, etc. So I think this is where again I will repeat that the OEM, the vehicle maker, the other stakeholders, energy companies, etc., will have to work with the financiers and develop these innovative products to de-risk every stakeholder in the whole chain.
Right, Dr. Dev. Also, there are entities like you all are Ether who already have, I think, they make their own battery packs. So
No,
this model
battery,
will not.
see the quality is underlying, which is not only for the lending purpose. Quality has to be, because you see, I am selling a vehicle for about 3.5 lakh, 4 lakh. Okay, it is as good as an entry level car. So the way we see is that let's say what is that, Wagon R, right? or Alto, that kind of quality or durability or assurance that you give or Maruti gives to its customer should be the aim that a three-wheeler maker gives to its customer. You never open the dicky or the boot of the car, I mean the hood of the car to check the engine. I don't remember I have done it for the last 20 years. Whereas earlier you go back Hindustan Motors and Fiat, first thing you do in the morning is open the hood and check the oil and water and the quality leakage, etc. So this is how cars are built today. They are built not to fail. So that should be the way it should be done. Okay, not that, like Danish also mentioned, everybody seems to be in a hurry to go to market with their scooter or three-wheeler. So automotive is a serious business. It doesn't work like that. Okay, vehicle making is the easiest part of the whole chain. You have to only tighten 50 nuts and bolts and make a vehicle. But that's not what automotive is. It's much more serious play.
Right, Dr. Dev. What is happening on the insurance side of it? I think that gives some bit of cushion to finances. Is there a significant serious or big players who are insuring the EV vehicles right now in this sector? Dr. Dev, if you or Mayank, if you have any insights on it.
Yeah, insurance is happening. Again, insurance is kind of linked to the financing part of it. Because every vehicle has to be sold with the insurance. Insurance is happening, but the premium, etc., are again, high. So this is where the cost of acquisition becomes high. But players are there. I mean, insurance is happening, and also because it is a mandated thing. So, you can't sell without insurance. So that's another point.
Right. Joseph, you are also
Yeah.
working with CALSTART and have, in other international countries
Yeah.
helped in some of the EV financing or would have, experience in that. So
Yeah.
what could be what things that have you done there in the global experience? And do you think there are any good things that can be imbibed for the India market also?
Yeah. So before I jump onto it, couple of thoughts on the decoupling the battery. So yeah, that issue, I'll just add to what Mr. Dev had already. Couple of thoughts. So the issue has been like perennial. There was a continuous engagements on reducing the individual batteries GSTs to 5%. But there was a lot of dialogues, around the battery swapping policy are still happening, and the discussions, there's certain OEMs are on board, certain OEMs are on not on board with the what DST has come up with. So there is a consensus needs to come in once the battery swapping policy is out. I think the battery decoupling market will grow, and the financing of the battery swapping will also grow in that sense. The second aspect is, CalSTART is a global nonprofit, and so along with the government of Netherlands, CalSTART co-leads a global MOU, which is an official campaign of clean energy ministerial. So it brings together 33 country signatories, overall 120 endorsers, which are from the private sector, including subnational governments who are committed to working towards 100% new truck and bus sales being zero emission by 2040. So in terms of global learning, working with these 30 plus countries and several other players, we are also deploying the first financial product against residual value risk of zero emission trucks in the US. And we are actively engaged in the international efforts around demand aggregation and private capital mobilization, including in global platforms such as Collective for Clean Transport Finance and also Fleet Electrification Coalition. And in India, we're also supporting the eFast initiative of NITI Aayog. And the Drive to Zero of CALSTART also convenes a global, forums such as like zero emission freight vehicles, aimed at creating a mass market for zero emission freight vehicles. And along with, again, a government of the Netherlands, we also co-lead a global another forum called ZEVWISE. It's a shared initiative to accelerate action around, again, the financing around the infrastructure issues. So there is a lot of knowledge exchange between the countries, between the developing the products for creating the platforms for the industry to invest in these geographies, and such kind of activities we are working on.
Right, Joseph. So there are some one follow-up question, Danish, maybe for you that you can talk about is how, in given the scale of transition is huge in EVs now, what more or what should be expected from government side to attract the private capital? Or what should happen in the complete ecosystem to attract that private capital?
Got it. Yep. So I think government has done their fair share with the FAME subsidies and PLI schemes. And I think government is doing fairly well on that part. On the private investment point of view, it's something that the landscape has to develop on its own over time. And obviously, there's a push from the government for the adoption for the landscape, for the EV landscape. And we've seen that happening with the numbers that electric vehicles have posted in by the end of last year, 2023. It's a phenomenal growth. And the whole world is appreciating, and international investments are coming in. For example, with our portfolios also, international investors are coming up, and so actually the value has to come out from the startup in that sense. And the mobility landscape is improving on a daily basis, I would say. New technologies have to come in India. And for that, I think government is doing their fair share in today's budget also. I think I mentioned earlier also, they've mentioned 1 lakh crore budget for research and development. So research and development from the core, from the bottom line has to improve in India through institutions such as IITs and all those. And the technology has to improve, on which the global players, global private equities, venture funds can come in India and actually look at the technology that has been built in India for India. And that would attract more foreign capital. I think it depends on how the technology is evolving. Government needs to push more technical advancement. And I think the Indian market is huge, and electric vehicle penetration is improving, and it's going to improve. I think what India needs to showcase for foreign investors is that it has the technical capabilities to actually improve, and I think that will attract foreign capital automatically.
Right, Danish. Also, maybe if all of you can give some bit of insights, in last 1 year, there have been fire accidents with a lot of brands, I would say. So how is the situation now? And do you think in nearby future this is something which can be taken care of? Because this is the most risky thing in terms of financing perspective also. So any thoughts on this? How this thing is improved? Do you think there are substantial improvements going forward?
Yeah, I will answer. The improvement is there, but I don't know whether improvement is by chance or by design. You see, the improvement can happen because the fires are not getting reported, or it's such a huge country, who keeps track. Because I know at one point in time we were having almost one fire every dealer a month, so that kind of fire was happening. But somehow things get diluted in this country. So the point here is that this is where again the technology has to play the role, and again the seriousness on the part of the stakeholders, which here are battery pack makers, because we don't make cells as of now. pack makers, BMS makers, and the OEMs. The cells are obviously coming from mostly from China, but who checks the quality, what kind of quality they are selling you, what are the grades, and how you mix and match them properly. And the BMS is the biggest, role player here. So, at least make the BMS here and calibrate it properly. So those are the issues which need to be taken care of by the vehicle maker. So that's why I'm saying that it is a serious responsibility on the on OEMs to whatever vehicle, two-wheeler, three-wheeler, four-wheeler, five-wheeler, I don't know, whatever you are making. But please, pay some attention to the quality and, that seriousness has to come. I'll give you an example in Honda cars, IC engine, 5 years it takes to fine tune an engine, 5 years of continuous testing, validation, retesting, etc., etc. That is how the car is built, And here, I don't think people are prepared to wait even 5 years, even the including the investors. So I think this is where not only the battery BMS, but the whole the propulsion system, motors, controllers, etc. There is a huge amount of difference R&D makes once you fine tune it, once you integrate it properly, and improve the efficiencies, etc. But safety, of course, is something which is uncompromisable to my mind, because if somebody lost his life, then this is a serious matter for everybody involved, and sitting outside, we may not realize, but person whose member is gone is something that they will suffer rest of their life, and for what, for a silly some silly mistakes on the entire supply chain. So I think the whole and the battery pack supply chain needs to be absolutely robust. What are the checks and balances you have put in place, because you are not making the cell? So how do you really risk proof your product? So that is where the whole engineering R&D lies.
What about
Um,
local suppliers, Dr. Dev?
Local suppliers of the battery
So
pack.
for local suppliers of cell manufacturing, we are hearing a lot of news announcements by the players. Do you think uh, within next 1 or 2 years, you see a supply chain from India,
You
concrete
see,
supply chain?
it is great. People are investing. There is a PLI scheme, etc., etc. But you see, we'll also have to go deep and understand the entire supply chain right from the R&D side. What is the R&D that you have put in place? Somebody is making announcements after 6 months. I will start making a gigawatt hour of battery pack and all. Doesn't work like that. Companies who are the major manufacturers, CATL, SK, they have taken a decade, 10 years to stabilize the processes. It is not simply something that you put all the ingredients and masala and you have the dish ready in 1.5 hours. ऐसा नहीं. So this is where I think the 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 manufacturer, it is great to be enthusiastic about it. I'm really gung-ho on what Ola is doing or Ather are doing, etc., and backed by the tons of money that they have raised. This is great. This is the first time I am seeing in 4 decades of my life, that automotive industry is getting so much of money. In our time, the only way to raise money was go for an IPO, and 100 crore IPO was a big thing. Here, 100 crore, I think Danish is writing checks every day. So so what I'm saying is, please, pay attention to the entire the R&D that goes behind manufacturing a cell. There are 100+ materials. It is not only lithium and graphite. There are more than 100 other materials, and how you mix it, how you have a robust, stable supply chain. I know, our partner C4V in the US, they are still not ready after 4 years of having the line in place, manufacturing line in place. They are constantly improving, debugging, making the process robust, because so that, every cell that you make has to have this same quality, same robustness, same degree of safety. So this is important. It's great to be enthusiastic and dump tons of money, but please look at the engineering aspect of it.
Right, Dr. Dev. Appreciate your candid views. Mayank, you were saying something.
Yeah, I was just, I mean, obviously, what is being said today about fire hazard that has happened, it's obviously appalling. That being said, I think I wanted to bring some perspectives here about its impact on lending, financing, etc. Right? I think people who are looking at, obviously, they are tiered lenders, right? There are people who are obviously staying away from electric mobility. There are people who are embracing it, and there are people who have committed some sort of pilot money, if I were to call it that, in trying out lending into this sector. And the fire itself does not, incidents don't themselves really make too much of an impact as far as the people who have already gone for it are concerned. They might change their views about an OEM and go to the next one. Um, all of that may happen, but overall, it may not impact the nature of financing EVs, right? For example, they will not raise their interest rates or lower down their LTVs because of fire happened or didn't happen. But I think there are other issues that engineering is complicated for electric vehicles. But more than that, I think one thing that over the last 1.5 years has happened is the reality of the service network of a lot of OEMs has been exposed. People who have taken bets on some of the earlier OEMs have now suffered for it. A customer is not going to pay if their electric vehicle or the replacement charger is not available for the next 3 months. That is not going to happen, and I think that impacts those market noises impact the risk departments and the sales departments of these lenders a lot more. So I think, as uh, as Dr. Mukerji absolutely aptly said, it is not um, it is not a tech startup. You can't fail fast and succeed fast. It is, you have to work deeply on your R&D, you have to work deeply for years on your engineering, and similarly, you have to work deeply and invest deeply in your go-to market and route to market, the service networks, the engineering or the service personnel, the supply chain for parts in case of breakdowns. And I think we are failing miserably on that as well.
Right, absolutely right, Mayank. We cannot start fast and fail fast, succeed fast, basically. So correct on that. So yes, of course, we need a very solid R&D focus, but I think given there is a lot of investor money that is there in this sector, it will have its own journey, I would say. So before I conclude the session, any concluding remarks from all of you pertinent to the topic that we're discussing today? Any final thoughts, any one of you?
No, I would only say that this is a great space to be in. The opportunity size is huge. We know that 99% of the commercial vehicles in India are sold through financing. So obviously, if financing community is not financing for whatever reasons we debated, they are missing out on this. But at the same time, coupled to the opportunity are the solutions what are required to be done. And I am always advocating the need for a robust supply chain. This is where MSMEs come in. The auto industry succeeded in the past because of MSMEs, almost 70-80% of the players are MSMEs. So they need to be supported by whatever means, policy measures, fiscal measures, etc. So this is where I think the whole success story will be written in this. Opportunity coupled with the solutions. And I mean, this is a long drawn game. This is where the R&D will play a major role. Technology will play a major role It is not, if you're in a hurry to go to market, then better sell and deliver pizzas. Then this is not the, industry for you. So that's what I will tell the startup community, that this needs a lot of hard work, a lot of, time, money, resources, investment. So that's where I stand, and my good wishes, my best wishes to the entire lending community. Please come on board. At the same time, work with the industry and develop solutions.
Thank you, Dr. Dev. Joseph,
Yeah, I'll
anything
just
to
add a quick thought on our colleagues have mentioned so many items, but I'll just speak on the how we can attract the private equities, private capital into this ecosystem. So the one thought is like we need an Invest India 2.0. What I mean is, right now, CSL has done a great work in terms of putting a bankable projects in buses and worked out the contracts and brought the prices down, and we need a dedicated institution who put together these ingredients for a bankable projects or a investable projects and contract, and develop these as a package, and then give it to the invest, and then open it up for the investors. Otherwise, right now the investors have to come and look for the ingredients in India and put them together, and it's a massive challenge. Who has no idea of the Indian market? And if we want to see the transition fast with a limited scale of public funds, we need to work. We need to have a dedicated institution which also replicates our learnings from the RE sector and build this bankable and develop investable projects and open it up to the investors, both domestic and international.
right, Joseph? Definitely the huge chunk, if can come from multilateral donors, that will add, that will give the initial boost also. Danish, for you, I think Dr. Dev has clearly mentioned you should start investing in R&D and tech companies now.
Yeah, we're actively looking into it. We are investing, and we are advocating to actually a lot of players to actually sit and build tech. I come from an engineering background, so put a lot of emphasis on it. And yeah, a lot of companies come across on a daily basis. We're making two-wheelers, three-wheelers. You need to have research and development. Take automotive industries from the 80s till 2024. Talking about the ICE segment, the development is huge. You started from carburetor engines to fuel injectors, and then now the industry is moving to ADAS. The R&D capabilities of ICE automotive manufacturers has improved, drastically. So that is something that OEMs in electric mobility segment also need to inculcate.
Right, Danish. I think with that, I wish to conclude. Our time is also over now. Thank you everyone for joining us today, and thank you to all my panelists for this lovely and wonderful session. If the recording of the session will be available on our website also in few days' time. Thank you. Thank you for your time. Look forward for the next webinar now. Thank you.
Thank you, Jyoti. Thanks a lot. Thank you.
Thanks, Jyoti. Thanks, everybody.
Bye, everyone.